All right, what's up, friends? It is about 8:20 on Monday, August the 26th. Here we are in our major market indicators, right? And so I want to spend really, actually, the first little bit of time looking at what the E-minis have done since last night. So let's go ahead and take a look. We're going to go 5-day, 5-minute, and that should give us, that gives us yesterday's price action. Okay, so on Friday, we saw a major move down, right? So we saw this open all the way up here at, let's just say 290, 29.30 for posterity's sake. Little bit of a dip or retracement, and then boom, we just saw a huge move down. And then we saw a really concerning 1.5 point gap down this morning. Okay, and so I checked it at about, 7 o'clock last night or so, and saw this major gap down, and really thought that we were going to be in for a major down day, but what we saw over the course of the night is a pretty slow grind up until this at about 3 o'clock in the morning, and then we really saw almost getting back a vast majority of what was lost on Friday. However, so I see this, and we're now up 0.5 percentage point here in the minis. And so what we've seen is that the market has really, I think largely on a series of Trump tweets, which people were, I think, waiting for last night. What we've seen is this real big retracement and quite a lot of large candles. You go back in and take a look at the minis over the last couple of days, and at least during the after hours, you're not seeing a ton of large candles, but you have quite a few here, a lot of volatility right here in these minis. So I show this just to say that we started down, and as I was processing last night, a lot of my trade plan going into the week had this gap down stayed that was gonna kind of be shot. But what I really like actually is that we're seeing this retracement, right? We're seeing this move up because I think that lends itself pretty well to kind of what I'm thinking this week. Let's go ahead and let's take a look at the SPY. We're going to go back to this daily chart. All right, so here we are. All right, so here we are in our chart, and I want to show a couple of things here. I actually see this 294 area as being really solid resistance, right? So we've basically had almost a quadruple top, and we have this trend line that's been acting as lower support. Depending on where you draw these wicks on this trend line, you could either say that we saw a close of the trend line, although it looks like we're going to open. Let's just go to our trade window. So we're at 297 basically. So we're going to open right in this area if we were to open now. And so what that looks like is that we're just in this process of consolidation, right? And we're going to see a breakout, whether that's a break up or a breakdown, really either way, okay? My thoughts here is that we have this trend line acting as upper resistance, and we're going to continue to see this trend line move. We have this top right here in this 294 and a quarter area. So really what I'm wanting to do is a couple of things here as I process through this market. I'm going to continue to really see this 294 as resistance, okay? So I'm probably going to place, especially with this gap up, I'm probably going to place some level of upper either a credit spread here or potentially a diagonal. I really like diagonals. I like it, especially if we get a move up. They can pay out really well. So we'll see there. I think that if I were to do that, it'd of course be a put diagonal. Concern there, of course, is always commissions, and you're gonna. But a winning trade, right, is a winning trade. We're going to continue to watch this 9 EMA as well here. We closed below it. That's usually a signal for me that that's a pretty safe bet. And so when I say that had we jumped down in this 280 range, right, then this level of resistance probably wouldn't have given me enough short term because, I'm wanting to do these verticals just during the week, right? And so it probably wouldn't have given me an opportunity to verticals credit spreads, right, to get enough credit to make this worthwhile without adding a ton, right, a ton of contracts, which I'm just not interested in doing, right? And so I'm really looking at this kind of converging trend line and converging resistance line as how I'm going to be looking at the entire market itself. Okay, so that's really what I'm looking at for these. You're going to notice that, let's just go over to the small caps, similar looking chart, but we don't necessarily have as legitimate. You could probably create one right here, right at that 200 simple moving average as well. So that 151 area could also act, and we see a little, in fact, let's just duplicate this drawing and bring it on down right here to 151. I'll make this leg a little bit better, but you could probably say that at 151 there's a good trade to be had there. If we go to the 151s here, and we're getting a gap up, which I like, so I think we add potentially add here, but let's see what we would get at 151, 25 to 12. That's not terrible. We're going to see a little bit more. We've got a 13 delta, which is nice. We are, of course, pretty susceptible to gamma risk and vega risk as well there, even though we benefit on the delta and theta, right? So it's kind of a give and take here. But that's really what we're seeing across all of the major indices. So this basically looks the exact same as the SPY, very similar to the IWM. The big difference here are our 200 simple moving average lines, right? That's a pretty big difference there, because in the case of everything but the IWM, our 200 simple moving average lines are below the price action right now and have acted as support for the diamonds, and we're still a little bit of room there in the Qs and the spiders. However, right here with the IWM, we're seeing that we're below the 200 simple moving average line. So I think that's worth keeping in mind. Volatility, let's pop open volatility. There it is. So when we look at volatility, this is the box that I'm always looking at, right, for bullishness in the market. We are bearish, but we've got VIX. Hasn't started quite yet, but we can look at VXX. We're gapping down 5% or so, a little bit more, maybe $1.20-ish. With volatility, I'm going to be looking to challenge this 21 area again, and if we do, I'll go ahead and put on some credit spreads there, probably in both UVXY as well as in the VIX. The VVIX is elevated. We will of course see that drop here at the open, but really if we get up to that 115 area again, and in fact let's even create an alert, is at or above 115. So if it's at or above 115, we're going to look to add pretty aggressively into some credit spreads here in our various volatility products. We might even add, something down here, bullish in SVXY, but that's really where we're at right now with some of these trades. Okay, so a lot of possibility here. I'm really looking at kind of what the major market does here for us. I'm excited about going into this week. I think that it's going to be a great week for us. If you have any questions, reach out to me right at Ryan, RYAN, @sellthatoption.com. Otherwise, let's get to it.